In 1817, Thomas Jefferson, former President of the United States, author of the Declaration of Independence, one of the most influential men in American history, requested a copy of a book, not a rare manuscript from Europe, not a scientific treatise, a rule book, a pricing guide used by carpenters in Philadelphia. He was refused. The Carpenters Company of Philadelphia, founded in 1724, told the former president that their rule book was for members only. It contained the formulas they used to price every stage of construction, the same formulas used to build Independence Hall, Christ Church, Carpenters Hall itself. Thomas Jefferson, the man who designed his own home at Monticello, who understood architecture better than most professionals of his era, could not access this document. I spent weeks trying to understand why. What I found wasn't about carpentry. It was about an entire economic system that existed before 1863, a system that didn't require banks, a system they had to make us forget. I came to this research through furniture. My grandmother left me an oak chair, solid and heavy, made sometime in the 1840s. Nearly 2 centuries later, it still sits perfectly level, no wobble, no creak. I started trying to trace who made it, and instead of finding a name, I found a system. The craftsmen who built furniture like this chair didn't operate the way we assume workers have always operated. They weren't paid hourly wages. They weren't taking out loans to buy materials. They were part of something called the guild system, and once I understood how it worked, I understood why it had to be replaced. The Carpenters Company of Philadelphia is the oldest craft guild in North America that still operates today. 300 years and counting. Their members weren't carpenters in the way we use that word now. They were what the 18th century called master builders, combining the roles we now split between architects, engineers, and contractors. When Philadelphia needed Independence Hall, they built it. When the colonies needed a meeting place for the First Continental Congress, they offered Carpenters Hall, which they had constructed themselves starting in 1770. These buildings still stand, not as historical curiosities propped up by constant renovation, but as functional structures. Their rule book, the one Jefferson couldn't access, contained something the official histories don't emphasize. It was a pricing system based on what they called unit pricing. Every stage of construction had a standardized fair price, not whatever the market would bear, not whatever a client could be talked into paying. A fair price determined by experienced members called measurers who worked in teams of at least 2, ensuring that no individual could inflate costs for personal gain. The system was designed to be fair to everyone involved, the craftsman and the client alike. Extended lines of credit between community members could be held open for months, even years. Work might be exchanged for food, for other services, for raw materials. The Bureau of Labor Statistics, in a 1928 report on wage history, described colonial America this way. A system of barter existed throughout the first century of settlement, and the very scarce currency was little used in the payment of wages. Face-to-face arrangements helped bind the community together. Now, the obvious objection is that this was primitive, inefficient. Thousands of different local currencies, barter economies, guild monopolies. The official history tells us that by 1863, the system had become chaotic. More than 7,000 different state banknotes circulating. A $5 bill from New York worth less the moment you crossed into New Jersey. Counterfeit currency everywhere. And they're right about the chaos. The Library of Congress documents upwards of 10,000 unique and legal banknotes in circulation, not counting counterfeits. But here's what I keep returning to. The buildings made under the old system still stand. The furniture still holds together. The communities bound by face-to-face arrangements produce structures we haven't been able to replicate. When did chaos become the only alternative to centralization? When did we stop asking if something else might have worked? February 25, 1863. President Abraham Lincoln signs the National Currency Act into law. It passes the Senate by a vote of 23 to 21, a margin of 2 votes. The act creates the Office of the Comptroller of the Currency and establishes the first national banking system. We're taught this was about stability, about creating uniform currency to replace chaos. But the official purpose, stated plainly in the legislation and confirmed by the Federal Reserve's own historical archives, was to help finance the Civil War by increasing demand for federal government debt. National banks were required to buy Treasury securities equal to 1/3 of their capital. They received banknotes in return worth 90% of the bond's value. To issue more money, Banks had to buy more government bonds. The entire system was designed to create buyers for federal debt. A 2% tax on state banknotes in 1864 drove many out of circulation. By 1865, a 10% tax effectively destroyed state currencies entirely. Here is where the pattern begins to emerge. The Homestead Act was signed into law on May 20, 1862, 9 months before the National Banking Act. It offered 160 acres of public land to any adult citizen for a small filing fee of $18. Free land. The great democratic promise. Except historians estimate that homesteading actually cost between $1,000 and $2,500 when you factor in tools, seed, livestock, and materials for building. As the National Archives states plainly, comparatively few laborers and farmers could afford to build a farm or acquire the necessary tools, seed, and livestock. Most of the land went to speculators, cattlemen, miners, lumbermen, and railroads. Only 40% of claims were ever successfully completed. The Homestead Act gave Americans free land they couldn't afford to develop. The National Banking Act, 9 months later, created the banking system that would lend them the money. Not coincidence. Pattern. What rose in place of the guild system tells us something uncomfortable. The company town. Lowell, Massachusetts, founded 1822, was the prototype. By the 1880s, approximately 2,000 company towns existed across America. Workers were paid not in currency but in scrip, a substitute that could only be spent at company stores. The Social Welfare History Project documents what happened next. Without external competition, housing costs and groceries in company towns could become exorbitant, and workers built up large debts that they were required to pay off before leaving. 75% of all scrip used in America was issued by coal companies in Kentucky, Virginia, and West Virginia. Workers couldn't leave because they owed more than they earned. The Pullman Strike of 1894 involved over 150,000 workers across 27 states. A national commission formed to investigate the causes labeled George Pullman's system un-American. But by then, the company town model had replaced something. The guild networks that regulated fair pricing. The barter systems that bound communities through mutual obligation. The extended credit between neighbors who knew each other by name. All of it gone. Replaced by scrip you could only spend at the company store. Sometimes I pause and ask myself if I'm seeing connections that aren't there. Maybe the timing is coincidental. Maybe the Homestead Act and the National Banking Act passed in the same period, simply because Lincoln's government was addressing multiple problems simultaneously. Maybe company towns emerged because industrialization required concentrated labor, not because the old systems were deliberately dismantled. But then I look at who still operates the old way. The Amish. They still use a contribution-based economy. When someone has a medical bill they cannot cover, they stand up in their weekly church ceremony and tell everyone about it. No one leaves until enough money has been raised to cover the expense. It functions like insurance, but within the community, without an external institution extracting profit. And here's what disturbs me. They had to fight for this. The Amish clashed with the federal government for years over Social Security, which they viewed not as a tax but as commercial insurance, something their faith prohibits them from accepting. Congress finally granted them an exemption in 1965. To maintain a system that worked without banks for over a century, they had to petition Congress for special permission. They must file IRS Form 4029, application for exemption from Social Security and Medicare taxes, and waiver of benefits. They still pay all other taxes. They simply refuse to participate in the replacement system. The fact that they had to fight proves the old system was made illegal. The fact that they still function proves it worked. There is another pattern I cannot ignore. Genealogists call it the 1870 brick wall. The 1870 census was the first to name all Americans, including formerly enslaved people. Before that year, tracing most family lines becomes exponentially harder. The 1890 census, which would have filled in critical gaps, was destroyed. A fire in 1896 damaged special schedules. A larger fire in January 1921 at the Commerce Department building destroyed most of what remained. The damaged records sat neglected for 12 years. Then, in 1933, Congress authorized their destruction. One day before that authorization, President Hoover laid the cornerstone for the fireproof National Archives building. The timing is almost theatrical. The same decade that transformed the American economy also transformed the American identity. Before 1870, you were part of a community, a guild, a local system of mutual obligation. After 1870, you were an individual documented in a federal census, working for wages, borrowing from banks, your family line traceable only as far back as the government's records allowed. What if the guild systems weren't primitive? What if they were alternative? What if the furniture that lasts 2 centuries and the buildings that stand for 300 years aren't anomalies but evidence of something that worked? The Carpenters Company Rule Book wasn't secret because it was valuable in a commercial sense. It was secret because it contained proof that fairness could be systematized, that communities could regulate themselves, that you didn't need a bank between every transaction. What if debt wasn't evolution but replacement? The Homestead Act offered free land that required borrowed money to develop. The National Banking Act created the lenders. The company towns created the borrowers who could never leave. The census created the documentation, each piece interlocking, each piece arriving in the same decade. I keep returning to that chair in my grandmother's house, nearly 200 years old, still perfectly level, made by someone who was probably paid in provisions, who probably learned their trade through a 7-year apprenticeship, who probably never signed a loan application in their life. And I keep thinking about all the furniture we buy now, designed to fall apart in 5 years, made by workers paid wages they cannot live on, purchased with credit cards that charge interest rates the old usury laws would have prohibited. Progress, we call it. But the chair still stands, and the questions remain. Why did buildings made under the guild system last centuries while structures built with bank financing require constant renovation? Why was the Carpenters Rule Book kept so secret that even Thomas Jefferson couldn't access it? Why did the government destroy the 1890 census 12 years after the fire, one day before laying the cornerstone for a fireproof archive? Why do the Amish have to go to court to maintain a system that functioned without incident for 150 years? Why does every American family tree hit a wall in the 1870s, the same decade the banking system consolidated, the same decade the census became comprehensive, the same decade the company towns expanded? I don't have answers, only patterns. And once you see the pattern, you cannot unsee it.